property this year. All right. Um, so I'm going to talk a little bit about my journey, and it's been 22 years journey. And the first thing I want to start with is when I started investing in real estate, I had absolutely zero previous real estate investing experience. Many of you know I specialize in multifamily, and I would say I specialize in large multifamily, but that's all relative. But my only experience with multifamily was that I lived in a multifamily building, but I never invested in anything. And I like to say that kind of with a little bit of humor, but it's true.
Yeah,
So,
it's on
you
your
know,
computer. Yeah.
I started just like so many of you with, my parents, they didn't go to school, they didn't go to college, and they didn't teach me to do real estate. They taught me to do what they didn't do. They taught me to get a degree. They taught me to study hard. They taught me to get good grades. And so that's what I did. I did everything right. I went to college, studied hard, got good grades, went to college, got a degree, went to master's for a business, got a second degree, and I worked for 17 years in corporate America and thought I was doing everything right. But the challenge was I didn't feel like I was getting ahead. And then I got laid off once, and I went back to work, and then I got fired, and then I went back to work again. But after getting laid off once and getting fired once, I'm like, hey, I did everything right, but it's not quite working out. And so it occurred to me that I needed to do something different. And I was in my early 30s at that time. And I actually started preparing for another degree. I started studying for the law school, the LSAT, the law school entrance exam. And at the same time, there was a book that came out somewhere in the year 2000, 2001, somewhere around then when that's when I read it. And it was a book that many of you probably read called Rich Dad, Poor Dad. So if you read that book, give me a thumbs up or type it in the chat. Just let me know you read that book. I'd love to see who else got started or got inspired or got motivated by reading the Rich Dad, Poor Dad book. Yeah, that's great. I love seeing the thumbs up here. So that book literally changed the way I thought about making money. It changed the thought, it changed everything I thought about making money. The old way that I learned was go to college, get good grades, save your money, work for one company or work in corporate America as long as you can, live below your means, put your money in your IRA and 401k, retire at 65 or 70, and pray that I die before I run out of money. That was the old way. The new way, after reading Robert Kiyosaki's book and then the second book, The Cash Flow Quadrant, he talked about ESBI. And E stands for employee, S stands for self-employed. That was all I knew. I was an E, an employee, and maybe one day wanted to be an S, self-employed. But then I read Rich Dad, Poor Dad, and I learned about being a business owner and being an investor. So after I read that book, I was living in Houston, Texas, and Kiyosaki talked about real estate investing. I didn't know the first thing about it. Like I said, the only thing I never had flipped a house. I think at the time I had actually owned the primary residence. So I had bought a single family home that I lived in, but it was not an investment. And my only experience with multifamily was living in one as a tenant, as a resident. And so I went to this real estate investing seminar in Houston, Texas. I was the most skeptical person in the room. Very skeptical. I'm thinking, what am I going to learn here? I spent $500 for a seminar. I knew they were going to try to sell me something. So I didn't even bring a checkbook. I didn't even bring a credit card. Kind of sat in the back of the room with my arms crossed. But as I was listening, somehow I got engaged, and somehow just about everything the guy said made a lot of sense. So I took so many notes. I was like the last person to leave on day one, the first person to get there on day two. Day one, I sat in the back. Day two, I sat in the front. Took so many notes. Everything the guy said made sense. And after the seminar, I went out and I actually tried to do what I learned. And 8 months later, I bought my first investment property that I ever owned. And it wasn't a single family rental, a duplex, a fourplex, an eightplex. It was a 32 unit building, 32 units. And this thing put like 4,000 a month into my pocket, almost like clockwork. I mean, sure, there's ups and downs, months it does better, months it does worse. But this was in 2002, and like clockwork, it was putting money in my pocket. So 8 months after that, I bought another one. I had 32 was my first one, and I bought 30 was my second one. And again, this put another 3 or 4,000 a month in my pocket like clockwork. So within 16 months after taking that seminar, I was making 7 or 8,000 a month, tax free. And the reason it's tax free is you get depreciation when you buy these buildings, which means like the government lets you, you know, the value goes down on paper, but the market value actually goes up. But I'm filing my tax return showing I'm losing money because of depreciation. So I'm not paying any tax, and it's 100% legal. I'm not paying any tax on my cash flow. So I quit my job in 2005, and I became a full-time real estate investor. My third deal, a broker brought me 250 units. I didn't have enough money to buy 250 units. I was wiped out buying 30 and 32. I mean, I bought these deals with my own money. Okay, I didn't know the first thing about syndication. I didn't even know what a syndication was. And then this broker brought me this 250 unit deal. And the thing is, after I took that seminar, they had like a program where you get mentoring and you get to be part of their community. And I became part of that. And so over those 16 months when I bought 62 units, I got to know all these other people in that community. So when the broker brought me the 250 units, I was able to raise $2 million from 27 people. And I bought that 250 unit deal as my third property. And I didn't have a lot of money at that time. Most of my money was tied up in those first two buildings. I think I was able to put in around 50 grand into that 250 unit. And I used 2 million of other people's money. And what I learned was it was easier to do the 250 units. The lenders were more interested in giving me the loan. The management companies, nobody wanted to run 30 unit property, but they all want to run a 250 unit property. And the property management companies, they do more. They put a property manager, they put a leasing agent, they put a lead maintenance person, they put a assistant maintenance person, they put a groundskeeper, they do all the books, they do all the, income and expenses every month. I'm getting financial reports. And it was so much easier for me to do the 250 units than it was to do the 62 units, the 32 and the 30. So that was back in 2005 when I started. And now here we are, March 19th, 2024. I've syndicated over 10,000 units in what I call a general partner. And I'll talk about that a little bit later. But what that means is I'm typically on the team that finds the deals, analyzes the deals, raises money for the deals, manages the deals, closes the deals, managing the deals. And because I'm doing all the work, I could get paid a fee by the passive investors that aren't doing any of the work. Okay. So one of the things I'm going to talk about tonight are the different ways to invest. Now, could I go ahead and share my screen, John? Because I got some slides that I put together. It says it's disabled. If you guys could enable me to share my screen. Okay, it's enabled now. And I'm just going to walk you through some things that I put together for tonight. But I wanted to start by sharing with you a little bit about me. So the reason I did that is that if I could do it, anybody could do it. I mean, I had no previous experience. I took a weekend seminar, and then I bought, 32 units with my own money, and then 250 units with other people's money, and then I went off to the races. So I'm in like 27 deals right now. I've done 57 apartment communities total. I've sold a bunch of them. meaning they went full cycle. I bought them, improved them, sold them, made investors and myself money, transformed the communities, made these properties a cleaner, better, safer place. And I'm still in a bunch of deals, and I'm still buying deals today. And then I started this education and mentoring program where we do events in multifamily education and coaching. And I started that over a decade ago. So that's a little bit about me. And what I really wanted to talk about tonight is like where we're at in the market cycle. And one of the things that I've realized is that after being in this business since 2002, is I've been through the 2008 downturn. I've experienced it firsthand, and it was a tough time, but I didn't lose everything. In fact, I didn't lose anything. I mean, I was challenged a little bit. I had a couple deals in 2008 and 9 I was putting money into. Talking about cash flow, I had cash in because we were in a recession and we had some challenging times. So I made it through that, and I came out through the other side. And then the last decade has been like super, super amazing. And now we're in another market cycle. So I'm going to talk about market cycles. It's natural. There's always going to be market cycles. There's going to be another up cycle, and after that, there's going to be another down cycle. So part of being an investor, just like the stock market goes up and down, but in real estate and multifamily, we have a lot more control than we do in the stock market. But still, one would need to understand that we have market cycles. Two is I want to talk about like why now is a great time to get in. And one of the reasons is that we're at the bottom of a market cycle. And I'm going to talk about the other reasons. And then three, I'm going to talk about keys to success for winning. So if you want to win in multifamily, then you might want to continue to stay on, because that's what I'm going to talk about. So I have a big mission. When we started our education company over a decade ago, I said I'm going to impact and mentor over 1 million people to achieve financial freedom. And the best way I know how to do that is by investing in apartments. And in order to do that, we follow a system. Okay. So over 22 years, I've developed a system. I call it a framework. There's a unique way that I approach this business in terms of finding deals, analyzing deals, funding deals, managing deals, structuring deals. So I follow that system, and we improve the communities that we buy. Okay, so that's my personal mission in life and my company mission. And I already gave you a little bit of history about me, but if anything I missed here, I already talked about all that kind of stuff. Okay, so if we look at market cycles, one of the things that, and I didn't create this chart, by the way, this clock, I cut and pasted this from a investment conference I went to in January. And it wasn't even a real estate conference. It was just an investment conference. And, you have the 12 o'clock position. You have the 1 o'clock position when interest rates are rising, 2 o'clock position when prices are falling, 5 o'clock position when money becomes really tight, 7 o'clock position when interest rates start to lower, 8 o'clock position when prices start going up, 11 o'clock position when it's easy money, it's easy to get debt and equity. And if you look at this chart, I want to ask you a question. Where do you think we're at? And for those in the Zoom, you could type in a number. Where do you think we're at on this chart? And then for those in the room, I can't see you, but just think about where we're at. Yeah, so online in the Zoom, I see one person saying 7, one person saying 6, one person saying 1, one person saying 5. Well, it occurs to me that we're somewhere in the 5 area. I definitely believe we're past 4 o'clock. Okay, interest rates rose in 2022 and 2023. Now they're flat. And in January, just 2 months ago, we're hearing like the Fed's going to be lowering rates 7 times. I'm getting all excited. But now it's like, well, the economy is the inflation. The CPI reports just came out. Doesn't look like they're going to be lowering rates right away. And instead of it happening in March, actually tomorrow and the next day, it may be kicked down the road until, maybe June or July. But they're still forecasting 3 rate cuts this year. Once they start cutting rates, we're going to be at the 7 o'clock number. So I know we're past 4 o'clock because money is tight. It's harder to get debt. It's harder to raise money for equity. So I feel like we're in that 5 o'clock position. Okay. And I could be wrong. But I think in the near future, when they start cutting rates, we're going to be moving past the 6 o'clock position. So the next question is, when is it the best time to buy? Okay. And if we look back over the 2020 post-pandemic period with apartments specifically, rents went up. It was one of the best times to be a property owner. And if we would have known, hindsight is always 2020. If I would have known, I would have sold everything I owned in 2022. In 2022, I believe that was the top of the market. Okay. But people were still buying and they're excited because they don't see the cycle. I was buying stuff in 2022. I mean, I was excited about stuff. Okay. And now we're in that area, I believe, where it says it's best to be greedy here, somewhere in that red oval. Okay. And for me, I'm not telling you what to do, but for me, the worst thing I could do is panic. The worst thing I could do is if I panic and get out, that's the recipe to losing money. And so to me, I want to do everything possible to make it through this downturn and come out the other side. And I'm just sharing with you, that's what I did in 2009 and 10. I had a couple of deals back then that I had to put money into, and I made it out the other side. And that's not a guarantee that I'll make it out the other side this time. And look, I'm in 27 deals. I mean, most of them are doing pretty good, but a couple of them, we bought in 2022 at the top of the market. We have short-term loans. We have variable rate loans. We have interest rate caps to protect us. But at some point, you may have heard like some of these loans will come due. So now we're looking at our options. Okay. But most of them are doing well. But the bottom line is, because I've been through this before, I believe I'm going to get through the other side. But look, if you're not in the business, let me ask you, when is it better to get in? Is it better to get in at the top of the market? No, it's better to get in at the bottom of the market. And so, again, I believe that we're in that bottom of the market cycle where most people are fearful that it's best to be greedy. So just skipping through some of this stuff here, Warren Buffett says, you've all heard this before, right? Has anyone heard this before? Warren Buffett once said, be fearful when others are greedy, and be greedy when others are fearful. Now, there's another person that many of you know, and I know this guy personally. He's a good dude, Grant Cardone. He's got as many people that love him that hate him. And I happen to like the guy. We're different. We have different business models. We have different things, but I've been to his events. He's been on my stages. Maybe some of you have seen him on my stages. But Grant says, hey, you don't invest to get rich quick. We invest to get rich for sure. Okay. So what that means is, over the long term, multifamily has proven to be an asset that helps make people rich. For me to say it in another way, it's a great tax vehicle for tax reduction because of depreciation. They cash flow. They provide positive cash flow most of the time. Some of the times they don't. Most of the time they do. And over the long term, they go up in value. Okay. So I could just say, personally, I've been doing it for 22 years, and this is what I've experienced. I wouldn't have been doing it this long if it wasn't a business that would allow me to make money. And I wouldn't be mentoring and coaching people for over a decade if I wasn't able to help other people make money doing apartment investing. Does that mean that there's never going to be a down cycle? No. Does that mean that you have to know what you're doing? Yes. Does that mean you could potentially lose money? Of course it does. Okay. So any business and any investment has risk. And for me, the way you mitigate risk is education and experience. And until you have experience, you get educated and you work with experienced people. So that's been, what I've been doing for 22 years. So I want to show you an example, and this is a very simplified example, but I'm going to show you an example of how things work. Now, there was a lot of things I could have talked about tonight, and one of them was how to value an apartment building. And so I'm going to teach that right here without having the formula on here. But if you have a pen and a sheet of paper, whether you're in person or whether you're on Zoom, I want you to take out a sheet of paper, okay? And I want you to write down the word or the letters NOI. And NOI stands for net operating income. All right. And the net operating income has two pieces. There's the income minus the expenses. That's why it's called net operating income, because you take all the income and then you subtract from it all the expenses. So the income is going to be rent. Rent is the number one source of income for an apartment building. And then there's going to be other sources of income, like, maybe laundry fees or utility income or parking, reserve parking and stuff like that, application fees. If any of you ever lived in an apartment, you know what I'm talking about. There's a lot of other fees that you pay besides rent. Okay, so you add up all that income, and then there's expenses. There's maintenance and repairs and staff, payroll, the manager, the maintenance person. There's marketing, there's advertising, there's taxes, there's insurance, there's all these expenses. Okay.
Their logo showed up at the right
so
time.
So that's NOI. Okay. And then there's a cap rate, and a cap rate could be a number that people define it in a lot of different ways. One way to define the cap rate is what's the return that you would get if you bought the property all cash. Okay, all cash. And the way the cap rate is determined is by putting the building on the market and getting bids and seeing what somebody actually pays for it. And so the formula to value an apartment building is the NOI divided by the cap rate equals the value. Okay, so it's NOI on the numerator. The cap rate is the denominator. So NOI divided by cap rate equals value. Okay, so now that you know the formula, I'm going to show you how if we buy a deal and rents go up 3%, you make $3.5 million by buying a $10 million deal. So let's say I buy this deal for $10 million. And for example, that would be a 100-unit apartment building at 100,000 a unit. And that's a typical deal that we might see now in some of the markets that I like to invest. So that we find a 100-unit apartment building and the price is 100,000 per unit, and you'd pay $10 million. And if the rents are 1,000 a month, okay, so I'm trying to make the example pretty simple. Well, if the rents go up 3% a year, which is an average rent increase that we see in a lot of markets that I invest in, 3% a year, then over 5 years, the rents won't be 1,000 a month anymore. They'll be 1,160. So 3% a year, 3%, 3%, 3%, 3%. The rents will be 1,160. So that's 160 a month that the rents go up, times 12 months, times 100 units. So 5 years from now, whatever the cash flow is today, we're not even calculating that. Whatever the cash flow is today, 5 years from now, it's 192,000 more. So that's point one that I want you to make sure you understand. Whatever the rents are today, whatever the cash flow is today, it's 192,000 more in 5 years. So that's point number one. And point number two is whatever the value is today, It's 3.5 million more in 5 years because I showed you the formula. NOI divided by cap rate equals value. So if the NOI goes up by 192,000, rent's going up 3% a year, and we're going to assume everything else stays equal. Now that's a simple assumption. Everything doesn't stay equal. Expenses go up and taxes could go up and stuff like that, but rents could go up a heck of a lot more than 3% if you come in and improve the property and change management companies and take advantage of a more aggressive management company, or you pay more attention to expenses and income, keep your eye on the ball, you do value added improvements. So the 3% increase per year is a simplified example. But just by having rents go up 3%, that's 192,000 a year. And we take that 192,000 divided by a cap rate, and the average cap rate right now in the United States is about 5.5%. And so I'm showing you the math. 192 divided by 5.5, that $10 million property is now worth 13.5 million. So in 5 years, it goes up $3.5 million. And I know it's a simplified example, but I'm just here to tell you, like, that's how my net worth went up 100x in 2 decades. It went up 100x in 2 decades by doing exactly what I'm showing you here. Okay. So what I really want to do tonight is, if I could inspire just a few of you to open your minds to the possibility that you can do this, then I'll be successful. Okay. Because I'll never forget when I went to that seminar and I was very skeptical. And I shared with you that somehow though everything the guy was saying made sense. So if I could be that guy today for just a handful of you, hopefully everybody in the room, but even if it's just a handful of you, then I'm going to consider this a success. Because why else would we be sitting here tonight? Like, you could be watching Netflix, you could be having dinner with your family or your friends, you could be out at happy hour, but you're here and you're not just here to get educated. Education is not power. Education plus action is power. And so if all you get out of this was, hey, this guy was a good speaker, wow, he was inspirational, he was motivational, and then you go back home and you do the same things you're doing tomorrow or next week or next month as you've already been doing, then it's not successful. I'm on a mission to impact people's lives. And I'm hoping that some of you will be part of that mission. That's why I'm here, John. That's why I'm here. Okay. So 9 reasons right now in March 2024 why multifamily makes sense. Well, number one, it's on sale. Okay. We're at the bottom of a market cycle. I don't know if we're at 4 o'clock or 7 o'clock, but I can tell you we ain't at 12 o'clock. We're not at 11, 1 or 2. We're down at the bottom. We're at that 4, 5, 6 point. Okay. And the studies show that multifamily real estate is about 20% off from where it was at the peak. So you get a better deal today than you did 18 months ago. So that's number one. Number two, the fundamentals are still strong. Unemployment is low nationally. Of course, you want to select the right market, but overall unemployment is low. And overall, there's a shortage of housing. Okay. And the economy is still relatively strong. Now that's debatable. Okay. But overall, if you just look at the numbers, the CPI index, the unemployment numbers, the jobs that are still being created, the GDP, things are still tracking, okay, in a positive manner. Number three, there's a huge shortage of new housing units, and that includes single family and multifamily. There's a shortage of housing units. And if you look at number four, compared to single family homes that people will buy to live in, there's a huge gap in how affordable it is. Like for someone to go out and buy like a $350,000 single family home to live in, or a $400,000 single family home to live in, I read the other day that you need to have like $100,000 of income, and a 660 credit score. So what is the family going to do that makes 50,000 a year or 60,000 a year, that has a family of four and they make 50 or $60,000 a year? It's more likely that they're going to be renters. Okay, the demographics of America is changing. There's more people renting now than ever before. Okay, it's harder for that working family to go out and buy their first single family home. So they're going to be renting longer. Now, when I look at, I've been investing in apartments for 22 years. In the last 5 or 10 years, it's been really competitive as an apartment investor. 30 or 40 buyer groups looking at deals, making offers, bidding up the pricing. The terms have been really competitive. Now I'm seeing less competition now for people that want to buy apartments. Instead of 30 people looking at a deal, you might have three. Instead of the terms being seller friendly, we're seeing buyer friendly terms. Okay. So it's a great time to get in because you don't have, 20 or 30 other groups bidding up the price on you or bidding up the terms on you. Like, you as the buyer have a lot more power now. It's truly turned into a buyer's market. Okay. Imagine this: real estate is on sale and it's a buyer's market. So you get to set the terms, not the seller. Okay. The tax benefits are still the best of any asset class that I'm aware of. We're still in a slight inflationary environment. CPI reports showed 3.2%, and that favors apartments because we can adjust the rents. And I already showed you, and I believe that we're at or near the bottom of a market cycle. Okay. And just to show that, like, this is the affordability gap. Okay. The affordability gap, this is showing the average monthly cost to buy a medium priced home, the monthly payment on a median priced single family home versus the monthly rent on a median priced apartment is about $1,300 a month. That's a big difference for a family making 40, 50, 60K a year. 1,300 a month is a big difference. Okay. And when I'm talking about the fundamentals of being strong, we could see up until now, that green line is the vacancy. The vacancy nationally has shot up because if we look at the blue line, we had a lot more deliveries coming on. We had all this new construction coming online after the pandemic. But that new construction is starting to taper off. And as the new construction tapers off, the vacancy is going to come back down. This is vacancy by property class. Most of the vacancy we're seeing right now is in the new Class A buildings. Okay, if I own a 2018 building, which I do, I have one of them, all the new construction that's popping up around it, they're offering move-in specials and leasing concessions. And then I got to compete with that. But my B class properties and my C class properties, which are indicated in that green and orange line, those vacancies are well below Class A, and they're my best performing assets right now, or the Bs and the Cs. The buildings built in the 1970s, 1980s, they're my best performing assets right now. And then if we look at where the rents are going to go, the rents came way up. If you look at 2020, 2021, 2022, that orange bar, the rents skyrocketed after the pandemic, and then they came way down to where they're at now in terms of rent growth. And now we're going to get back to like a really healthy 4%, 3% rent growth. Okay, so the rents are going to keep going up. They always do over the long term. And the sales price. I told you real estate is on sale. If we look at that blue line, real estate pricing peaked in 2022. And now here we are in the beginning of 2024. And you see the forecast, they're bottoming out this year, and then they're going to start going back up. So I'll leave it up to you. Like this isn't Brad Sumrok's data. This is data that I pull from industry experts, industry reports, the companies that have teams of people that are putting this kind of forecast together. Okay, and this is why I'm bullish about, like, I'm looking at being as aggressive as I can in 2024 buying deals. And it's a great time to get into the business. It's a great time to get into the business. So how to win? How to win? Well, number one is you got to be in the best markets. Okay. Number two is you got to form the best teams. Number three, you got to learn the basics. And for people, I've been coaching people for a decade, and I'm like, you got to relearn them and master them again. One of my themes for myself and for my whole team is let's get back to the basics in 2024. Okay. And one of the ways that you could do that is by investing in yourself, and going to the basics. Yeah, this is what I'm talking about here. Number one is you want to understand, what I call understand the deal. How many of you have ever looked at a multifamily like projection? Have you ever sat through like a investor pitch or looked at an offering package from a broker where they're showing you like, here's the actual performance, the pro forma, the value added upgrades, here's what you could do with the property. For those of you on Zoom, have you ever looked at one of those offering packages before? Those in the room, I can't see you, but actually I can see a little bit of the back of your heads for those of you that are room. So if you've seen an offering package before, put your hands up like this and I can see. Okay, I see some of you in the room. Okay, yes. And I'm looking at Daniel Jones online. Yes, you've seen an offering package. Has anyone ever sat through like an investor pitch deck presentation on Zoom? Anybody? Yeah, some of you have done that. Yeah, so before you invest, you really want to understand it. You want to understand these terms like NOI, cap rate, rent growth, operating income, operating expenses, pro formas, trailing 12 income statement. Like that's all part of understanding things. Debt and equity, fixed rate debt, variable rate debt, agency debt. That's part of understanding. Okay, and one of the reasons that people have lost money is they got into deals they didn't understand with people they didn't know. And I'll say that again. One of the reasons that people have gotten themselves into challenges is because they invested in things they didn't understand with people they didn't know. So don't do that. Get to know the people and get to understand what you're doing. So that's step one. And then once you understand, then you got to find and analyze deals. Like how do you get deal flow? Where do you get deals from? And how do you get a consistent flow of deals that you can look at and evaluate? And then once you get them, you got to understand them. I mean, you got to analyze them. You got to underwrite them. Okay. Then you got to make the offers. You got to negotiate. You got to go through the due diligence, the inspection periods. You're going to have to secure debt. You're going to have to raise equity. If you're doing a syndication, you're going to have to raise equity. So this is a whole new business. And that's the business that I specialize in is multifamily syndication. I also specialize in, buying your own deals with your own money. So look, if you want to go buy 6 units, 10 units, 16 units, my framework and my system can help you with that. And if you want to go out and syndicate an 80 unit property or a 100 unit property, that's what I really, really specialize in. Just about better than anybody else. Okay. And you really want to learn the 3 ways to invest. So the 3 ways to invest, you could be, and I already mentioned this, you could buy your own deals with your own money. Like that's how I started. I bought 32 units and I bought 30 units and I ran out of money. So you want to learn how to do that. You also might want to learn how to be a passive investor. Like what are the pros and cons of being a passive investor? The passive investor is like you put money in with somebody else that's going to be the lead syndicator, which I call the general partner. Okay, in my vocabulary, the passive investor is called the limited partner, and the lead investor is called the general partner, the person that puts the deal together. Okay, so there's general partners of the syndication. That's one way to invest. There's passive investors in a syndication. That's another way to invest. And then there's buying your own deals with your own money, whether you want to do a 4 unit, 6 unit, 8 unit, 10 unit, 12 unit, 16 unit, 30 unit. Okay. So that's the key. Okay. And the thing is where do you learn this stuff? And that's one of the biggest questions that I get. And I'm gonna do Q&A here at the end, and I'm gonna wrap up in a few minutes. But I'd love to tell you about an event that I'm doing where I teach this stuff. Okay, and just like back in 2001, I went to a real estate investing seminar, and I was the most skeptical person in the room. Well, for the past decade or more, I've been doing real estate investing seminars, teaching the fundamentals of multifamily investing. Okay, so I have two businesses. My two main businesses is I invest in multifamily buildings, and the other business is I mentor and teach other people to invest in multifamily buildings. That's who I am and what I do. Okay, that's my purpose. And my mission, I already shared with you, is to inspire, hopefully, many of you. If you're inspired right now, let me see you show of hands. Raise your hands up. Let me see you show of hands. So you're part of my mission because hopefully, if I've inspired at least some of you, okay? And it's also the mentor people. And so for the people that come to Dallas, Texas, I'll be able to mentor you for 3 days, okay? And what do? I cover exactly what I said. I teach my framework, and my framework is 4 steps. I teach how to understand the deal so that you know what you're doing. So what this means is never again will you understand, never again will you invest in something you don't understand. I mean, if you invest in an apartment building after taking my 3-day event, you're going to much better understand what you're doing. Okay. And I'm going to teach that. And I'm going to teach you how to find deals and analyze deals. I'm going to teach you how to fund the deal with the debt and the equity. And I'm going to teach you the steps to close the deal. And I'm going to teach you how to manage it once you got it so that you can exit the deal profitably. And I've been doing this myself for 22 years. And I've been mentoring other people successfully and one of the best in the business for 15 years. So I'm not just getting started. I've taught this system, this framework to hundreds and hundreds of people. Okay. And I'm going to teach the 3 ways to invest. And these are the only 3 ways that I've invested. I was an individual investor when I started, meaning I bought my own deals with my own money. And now my preferred model is to be part of a syndication. So I invest passively, and I'm in a bunch of deals as a passive investor, and I invest as the general partner in the syndication. And that's most of the deals that I'm in. That's the role that I play as the general partner. Okay. So I'm not able to go through this in a lot of detail, but I want you to see the big picture. How many of you know a guy that goes around talking about 10X? We all know who I'm talking about. Okay. And the way he 10Xs his money is he's the general partner of Cardone Capital. And the investors are limited partners. And so if you just look down at the bottom row, I have, what's the total profit? Okay. So I have the 3 ways to invest. I show like, hey, I'm going to buy my own deal with my own money. I got 100,000 that I can invest. And you could go out and buy a 3-unit deal. And what I'm showing you is if you buy a 3-unit deal in 5 years, the likelihood, the projected return will be about to double your money. If you're a passive investor in a syndication and you put 100,000 into a deal as a passive investor, the likely projection will be to make another 80,000. So you put 100 in and you'd walk away with your 100 plus another 80 in profit. And the likely projected return, if you're a general partner, which is your one doing all the work and you can see the different ways you get paid, is you'd put in 100,000 and you'd walk away with 900,000 profit. And that's the 10X formula. Okay. The people doing the work, which is finding the deals, analyzing the deals, raising the money, taking on the debt, taking on the risk of the debt, taking on the responsibility of doing the work, they're going to get a lot more highly compensated for the role that they play in a multifamily syndication. So I don't expect you to get all this tonight, but I want you to see the big picture here. Okay. And that's just another spreadsheet. I won't dive into that right now, but the property analyzer that I use, if you look at that red circle, it's really hard to see, but I'll tell you what's in it. This is a 146 unit deal that I just analyzed for one of my students. And on the third tab of my property analyzer, it calculates what is the general partner projected to earn. It's not a promise, it's a projection. It could be off. Okay. And over a 5-year period for this 146 unit deal, the general partner was going to earn $2 million. Now, I don't know about you, but I never earned $2 million in 5 years of corporate America. Okay. So if you want to learn the 3 ways to invest, the pros and the cons, the ins and outs, and you want to learn my 4-step framework, I'm inviting you to come to Dallas. So you can see here we have 2 ticket options. We have a general admission option, and we have a platinum experience option. The general admission is $147. And if you use that QR code, here's the deal. I'll give you a BOGO. That means buy one, get one. So for you guys and gals that scan that QR code and you buy a general admission ticket, you get 2 tickets, not one, for $147. And if you want to have the platinum experience, which includes an extra day, okay, and then you have an extra lunch with me and stuff like that. But the big kicker for the platinum experience is better seating and an extra day where I'm going to take you on a bus looking at properties in Dallas. Then you get $100 off using that QR code. So how we doing, John? Does anyone have any questions? And one of the questions I get, by the way, is, Brad, why are your prices so low? So I shared with you, I went to this 2-day seminar back in 2001, and it was $500. And it occurs to me that there has been inflation. And so the $500 seminar that I went to 22 years ago would probably be about $1,000. But they had 50 people in the room. And the reason my prices for it's a 3-day seminar are low is because I have a big mission. Like I showed you, I want to impact and mentor 1 million people. And so I like to make this information available to as many people as possible. And all y'all have to do there in St. Louis is get on Southwest Airlines and buy a $100 ticket and come down to Dallas for a couple of days. And I'm just going to tell you, you're going to walk away and you're going to know more than 99% of the people about multifamily investing. And wherever you're at in your journey, you're going to walk away with something much more valuable than what you invested for this event. So I'm kind of out of time. I could go on, and I do. Like I could go on for days, and I'm kind of running out of time. So what I hope to do tonight is explain to you where we're at in the market cycle, explain why I think now's a good time to get started, give you some tips on what to be focusing on here in 2024, and offer you an opportunity to not just say, hey, Brad, that was great, but to actually continue with your education and make something really good happen for yourselves and your families. I mean, picture a day when you invest in your first apartment building. Seriously, like imagine hearing the spouse say, hey, thank you for investing in us, and learning how to do this apartments. So any questions, John? How we doing there?
Okay, can you hear me, Brad? Yeah, this is Lloyd. I got the microphone here. John's at the computer in the back. Let's see. I saw 2 hands when you asked about questions. I'm gonna move the mic around here.
I have a thought question, so try to be brief. So I've been in those pitches where multifamilies are analyzed, and I've always noticed 2 things. One, having pitches accompanied by market rents or below market, you have an option to increase them. And my skepticism is, if that was so easy, why did you do that and you could have gotten a higher rate for your so how do I analyze the pitch? Because you sometimes see suspiciously low numbers in insurance, for example, or maintenance. And I have some single family homes where my insurance is way higher than what they're claiming. And is it ever okay for us to ask the seller for tax documents? So you can verify what the pro forma numbers look really bad or suspiciously low.
So John, I'm sorry, but I heard some of the words, but it was really hard for me to understand the question. Ivy, did you hear it good on your end? It was really hard for me. John, could you interpret that for me?
Can you hear me, Brad?
I think I could a little bit
Okay,
better.
yeah, I'm Lloyd. I got the microphone here. Basically, he was asking about, if you see the pro forma numbers on a potential purchase you're analyzing, is it okay to ask for the details, ask for the tax documents, so you can ask for the insurance receipts and payment, just to verify the numbers that are on there?
Well, look, absolutely. Like when you see a pro forma, it's usually a pro forma that the seller or the seller's broker will put together. And, you know, as I've gotten more experience, I've gotten to look at these numbers and I have enough experience where I know, like, you know, I know what insurance is going to cost me. I know what taxes are going to cost me. You know, I know what maintenance and repairs are going to cost me. But yet I still go and verify them. And so, yeah, absolutely. Like it's your responsibility, especially if you're using other people's money, to like verify these numbers. And there's a way that you could verify them. And some of them is by asking the seller or the broker to provide the evidence. And another way is for you to go out and get your own quotes. Because just because, you know, the seller might be paying this for insurance, but when you go get a new policy, you might be paying more, you know, than the seller is, or you might be paying less. So yeah, you absolutely should verify these numbers without a doubt. Yeah, and John Lee, is it okay to ask the seller for their taxes? I mean, yeah, you want to verify what the property taxes are. And then what I do is, before I would buy anything, I would work with a tax consultant in that local county to help me understand what my taxes are going to be. So I'm going to go one step forward and I'm not just going to ask the seller for their taxes. I'm going to try to predict, by working with a local expert, taxes that are assessed by county everywhere in the United States. They're assessed by county, and they're all done a little differently by state and by county. They have different protocols for assessing property values. So you want to be able to understand that and forecast it.
I'll try to go a little slower. I know it's a little hard to understand. Do you have a good resource? You had mentioned there's a lot of new construction that's going to be hitting the market. Do you have a good resource for seeing what markets that's going to hit in and kind of at what rates and what kind of impact that may have?
Well, let me see here. Yeah, so a good resource would be like a CoStar. Have you ever heard of CoStar?
Yeah.
Yeah, so like if you put in a property for CoStar, for example, you could look at, geez, I was just looking at this report. Let me see if I could even put it up and share a screen here. Well, I don't see the screen that I don't see the tab that I was looking at, but CoStar is a great, like I could type in any address in the United States and I could look at a 1 mile, a 3 mile, and a 5 mile ring around that address. And I could see all the construction that's coming online. And then I could get submarket reports. Like I was just looking at a property in DFW today, a property that I own. And I was looking at new construction that's coming online near it. So yes, you can find that out. I wanted to show you because I just love to teach, but that would be a great resource. Would be CoStar, would be one.
Great, thank you.
Anybody else?
I have a question, John. Who's interested in doing multifamily? Like how was did I move anybody? Did I inspire anybody to consider multifamily investing in 2024? How about anybody on Zoom?
Got some hands,
Anybody in the room?
yeah, we got some hands up in the room.
Yeah, let's go. And here's the other thing I'll say. I don't need to go. I could stay on, but learn from somebody. Like if it's not me, learn from somebody. Like learn from an expert. You know, do what I did. Like go to the seminar, be skeptical. I was skeptical. Go there with some healthy skepticism, but learn from somebody that's doing it. And John, here's the other thing. If anyone comes down from St. Louis and they don't get value, and Ivy take a note of this, not only could they do the BOGO or get $100 off, if they come down from St. Louis and they don't get value after attending my full event, I'll give them a 3x money back. So whatever they invested in a ticket, I'll give them 3 times the money back. So what I'm saying is if you come to Dallas and you attend my event and you pay 147 for a BOGO, I'll give you 147 times 3 back because I believe in what I do. Like I believe that you're going to get value from it. I know you're going to get value from it. If you come down and do a platinum ticket for 397 and you don't get value, I'll give you 397 times 3 back. So again, I'm at the risk of being aggressive. I'm not here I'm here to be here for you, John. I'm here to be here for your group and to add value. But I'm really here to get people to take action because now's the time to be taking action in this business.
Yeah, I was just gonna say, can you put up that QR code again? Some folks here.
Yeah, yeah.
Give me a picture of it when you had it up earlier.
Yeah. Let's see here. Share screen. Here you go. How we doing on time?
Yeah, Brad, here's one question here. What are some key indicators to pick up on when determining the right multifamily apartment building in the right area? Mr. Dave.
I can't hear you that good.
Okay,
Okay, wait. What are some key indicators?
yeah,
I
you
see
it
that.
on your chat?
Yeah.
Okay.
What are some key indicators to pick up on when determining the right multifamily apartment building in the right area? Well, here's what I say there. One is you want to get to know, a few markets. So St. Louis, for example, if you want to buy multifamily in St. Louis, like all the submarkets aren't the same. Like I don't know St. Louis that well, but I know the process is like, where are and here's the thing. Here's what I would say. I've done different property classes. I've done A, B, and C. But I'm sure in St. Louis you have areas that are, middle income areas, not the high income areas, and when I say middle income, I mean like working class middle income. Like where are the areas that are, safe areas where people make 50, 60,000 a year. And there's a lot of apartment buildings in every city. Okay. There's more in some than others. I mean, hey, I grew up in Pittsburgh. Like you don't see as many apartment buildings in Pittsburgh as I do in Dallas. But I just went to see my dad, and there's a lot of apartment buildings in Pittsburgh, certain areas. And I've been to St. Louis a few times. It's been a while. So I can't rattle off like all the different submarkets and neighborhoods. But you really want to get to know the areas that have apartment buildings that are like 2 or 3 stories, not the fancy high rises and the wealthy, you know, urban suburbs, urban and suburban areas. That's not what I'm talking about. I'm talking about the 2-story, the 3-story buildings that were built 30, 40 years ago. Okay. I'm not talking about high crime areas either. I'm talking about like, you know, working class family areas. And you go and drive by those areas and you start getting to know those areas. And you could go on apartments.com and you could see like what are these properties renting for? You know, and I'm talking about rents, you know, 800, 900, 1,000, 1,100, 1,200 bucks a month kind of places. You know, and then there's a 1% rule. And it's not the best rule, but like you're looking for some key indicators. So like, you know, if somebody wants 80,000 a unit, you know, then you could say, hey, the rent should be around 800 a month for that thing to make sense. Now that's not a hard and fast rule, and it's broken every day. Okay. So there's a 1% rule. If it's 100,000 a unit, and if you find out a property is 100,000 a unit, the rent should be around 1,000 a month. Or on the other side of the coin, if you go to apartments.com and you see the rents are $1,000 a month, then you expect it to be around 100,000 a unit. But again, that's an estimate. But I'm just looking at some key indicators. So I like to find, you know, middle income, low crime, good school districts. Are people moving there? Are people moving into the area, or are people moving out of the area? Are jobs being created in the area, or are jobs going away? Is it an area on the upswing or an area on the downswing? Like I have another property in Dallas that's built in 1969. And most of the people that live there are Hispanic families, but they have really good public schools. And so the people want to move to this area, you know, because for a middle income area, they have above average public schools. And so, you know, Hispanic families making 40,000 a year, they want to live at my apartment building because it's generally safe and they have great public schools. So is that helpful, Daniel? I know you asked for some key indicators. So those are the places you start looking at. Then you start to look on LoopNet and find brokers that specialize in selling multifamily properties. And you start getting to know these brokers, you start getting to know the properties, you start getting to know the areas of which parts of town are better than the others, where's the growth happening. Make sense? I hope it makes sense. Not rocket science. I guarantee you, whatever you're doing for a living to make money, like I studied engineering, man, that's tough. 4 years in a university to get a job. I mean, I graduated college and, you know, I'm going to tell you how old I am. Well, you'll figure it out, but I graduated college in 1989. And my first job was 33,000 a year after studying for 4 years to be a freaking engineer. And I'm just telling you, like, you don't have to study for 4 years to become an apartment investor. You got to get educated. You learn from an expert, get a mentor. But it ain't going to take 4 years of a university to do this right. And I'm living proof of that. All right. Well, by now, hopefully everyone has the QR code that wants one. Ivy, is there anything else? John, anything else?
Any other questions here in the room?
I have a question on Zoom.
Yes, sir.
So my name is Davon. I don't know what name is popping up on the screen, I guess, but I'm from Youngstown, Ohio, and I'm a wholesaler. I have a 44 unit deal under contract, and I'm used to dealing in single family. So I guess I could use any help or any pointers that you would have.
Well, of course I could do that. Like, you know what you could do? I'll tell you this. If you wanted to send me the deal, then I could do a quick analysis for you. I have one of my team. I have 11 coaches on my team. And so Devon, I'd see your name here. I'm scrolling back up and you wrote, you're a wholesaler looking to acquire your first multifamily property. So like, without me, I'm not sure what it is you're asking. If there's something specific you want to ask me right now, I'll do my best to answer it. But if you want to send me some of the numbers or your projections or, what you think the property is worth and have me take a look at it, like we'll look at it for you, brother.
Okay. Yeah, I would appreciate that. I can send all the details via email or however.
Yeah, Ivy more, if you look in the chat, Devon, Ivy put an email that you could send it. And make sure you put in the subject line, okay? Because if you send it to support, it could be, I mean, I got a support team, but make sure you put in the Sumrok, in the subject line that you were in this St. Louis Real Estate Investor Association meeting and you have a deal you want us to look at, and then attach whatever it is that you want us to evaluate or help you with.
Okay. I appreciate that.
Yeah.
He said he put it in the
Okay,
chat. That
we
was
got
all.
Couple
All right.
came up in the room here.
Quick question.
What about building a new complex? What do you think about that?
I didn't hear the question. It was, what about something? What do you think about that? But I didn't hear.
What do you think about building a new complex? New construction?
Well, I think it's great for some people that are in that business, and I'm just not in that business.
That's a whole other business model.
Yeah,
Maybe-
correct.
Okay.
Yeah, I'm in the business of buying existing multifamily properties.
If I two questions. Could you hear me, Brad?
Yes,
Okay.
yes.
You see
Is that Noel Bain?
Yes, that's me.
Yes, I can hear you and see you.
So two things. I have about 15 units right now. I have enough units where I don't really want to expand on single family, duplexes, triplexes, or fourplexes. I want to go to bigger units.
Yes.
And so I'm looking at a 60 unit building. The only thing is it's in the Bahamas, not here.
Ah,
Yeah. And so I'm trying to figure out funding for that. And I'm thinking about doing an LLC and doing some LPs. And I'm wondering what your opinion is on that.
okay. So the process of analyzing the numbers, there's going to be some nuances that are different in the Bahamas that I don't know because I've never invested there. Like what I know how to do is find out, rent growth. Well, the process will be the same. You're going to need to put together, bear with me here. You're going to need together, put together a projection, but like if the deal is in Florida or like Tampa or St. Louis or Kansas City or Dallas or Phoenix, I'm going to be able to get market data and be able to accurately forecast, rent growths and cap rates and get sales comps and rental comps and all that type of stuff. So I'm going to be able to put together a powerful projection. And then I'm also going to be able to understand like this some level, like what are insurance rates and what are taxes and how do things work and things like that. The Bahamas, it's a whole nother business there.
Yeah.
So you're gonna, what occurs to me is unless you're like from there or have somebody boots on the ground there that really understands all that stuff, you're really gonna need to have like a local, obviously like to me, a local management company or a local advisor or somebody that can really help you navigate all those nuances because there's gonna be certain similarities. Like, look, it's 60 units and it's an apartment building and there's NOI and those are things that are similar. But the way I would put together that forecast, like if I looked at the deal with you or for you, I don't have access to all those local nuances.
Yeah. I try to keep it simple, and so I look at the break even, and then the question then becomes, now that I got break even, how much money I need to make, um, and then I kind of go down from there. I also looked at pretty much, of course, the costs, insurance, maintenance, um, um, utilities, all those things.
Well, but I have a question. Why the Bahamas? Is that something that you actively sought out, or was it something that was brought to you? Like why are you looking at a 60 unit in the Bahamas?
Into internet connection is unstable. Could you hear me still?
Yeah, I can hear you now.
Okay, so I'm looking for deals, and I'm always looking for where are the deals. And right now in the Bahamas, especially being from there, I can buy into a property where the growth is is stable. It's very stable. People who rent, they rent for the same price regardless on what the market says.
Yeah,
And then the other thing that I like about it is that it's within 5 minutes of a beach, which means it's four buildings. I can take one or two of the buildings and convert it into tourist items, and then that is the growth right there. And so
yeah,
I figured that it's an opportunity to buy into something where people are not thinking about that right now. Most of the people who go there, they're thinking about buying a hotel
hmm,
and living in a hotel and renting out a hotel and that kind of stuff. They're not
right.
saying buying a building, a rental building already has income that is ready at least breaking even, and then how do I grow from there? So I'm where you are. What you're talking about, I buy buildings that produce income right now, tomorrow,
Yeah.
as soon as I buy it. And
Well,
but I have the difficulty I have is with funding
well,
because
here's the
go ahead. Sorry.
yeah. I mean, look, number one, you're from there,
Yep.
so you have a. I'm assuming you have some knowledge of the local. I'm going to call it, logistics and
Yep.
nuances of
Yep.
that might be different than here.
Yep.
And two, I also heard you say though you would run part of it, maybe more of as like a shorter term thing. And again,
Yep.
that's not the business that I'm in. I have about 7,500 units that I'm a general partner in, and not one of them
Yeah.
is an Airbnb unit, not one.
Oh, okay.
So it's a complete different business.
Yeah. Yeah.
It's like the person that asked me about what do I think about building a new building. And I'm like, I think it's great for people that are in that business. So I'm not telling you not to do it. I'm just telling you I wouldn't do it because I don't
Right.
know the Bahamas and I don't do short-term rentals, and it's a
Right.
different business in a way.
Right. And I may not do the short term, but it's an opportunity.
Yeah.
It's something that is there. If, say, for example, I was at a an island, and tourist folks visit the island, but they have nowhere for them to stay.
Yeah.
And so, in a case like that, I would go, "Hey, I have units that I can convert, and I can do that while." So that's an opportunity down the road. Uh, the other thing for folks, what I'm looking at is see the building behind me, the ground, the space, and all that stuff.
Yes.
That's now I know you're not doing this type of work, but that's a boutique, boutique resort, and the folks who own it, they just elderly, and so they couldn't do it anymore. So it's been sitting for a couple of years. So someone pointed that to me and said, "Hey, Noel, you can get this at a discount. It's a fisherman's village, and people go to this place and they fish a lot. If you want to, so what I'm looking for is I'm thinking about the limited partners to try and figure out how to buy these things through a limited partnership. I can bring in about $1 million to it if I need to, but these kind of things is what I'm looking at because I think that there's just a huge opportunity, and it's not on the market. These are not on the market, by the way. I just have people who said to me, "No, well, I can get the folks to sell them if you decide you want to buy it."
Yeah.
I told you to.
Yeah.
You're not making.
Well, look, that's great. That's just not my business.
Yeah. Okay.
So I can't really speak to that.
Okay. Okay. Now you mentioned that you're the GE. I mean a GP, general partner.
Yes.
Um, how did you go about doing the limited partners?
You mean, how do I raise money from people?
Yeah, exactly.
Well, when I started, I went to a seminar and they had a community and I joined that community and I was able to meet a lot of other investors over the years. And it took me time and energy, an investment of time and money to go to different networks and get known. And then I had a good track record.
Okay.
And now I built my own community. So a lot of the people will come to my events and they'll network and they'll meet
Mm-hmm.
other people.
Okay.
And so it's really you gotta get your ducks in a row, and then you got to put yourself out there and be parts of. You got to go where investors are,
Ah,
and you don't just go there and pitch a deal. You go there and get to know people. Like
ah,
one of the biggest mistakes people make is they show up and they're a stranger and they're pitching deals, and it's like, I mean, okay, let me level with you. Like, who would invest with a guy they never met before in a country they've never been to? Like,
yeah,
you know, like
yeah,
like you
yeah,
go and get to know people,
yeah,
right?
yeah.
When people trust you and they get to know you, and then they see where you're from and they see you're a good guy, and then you can start talking to them if they're interested in diversifying outside of the United States. And there are some people that are I got you know my friends at the real estate guys, they have a big podcast and a radio show, and they have a big development property in Belize, and
Mm,
they've raised tens of millions of dollars for that
right.
property in Belize. But I didn't put a penny into it,
Mm,
because
okay.
I like to invest in the U.S.
Right.
But just because I didn't invest in it, they got you know hundreds of people to put money into that property.
So I'm gonna look up your stuff and see what that's about in terms of I'm assuming your stuff is open to people who want to join
Sure.
your LP. Okay, so I'll look that up.
Yeah.
Now the question about Karitsu, you familiar with them? Karitsu?
No, I don't know.
No. Okay, because that's one that I went to Karitsu forums. Um.
Never heard of it.
Okay. Okay. It's in the Pacific Northwest area.
Okay.
Hey, Brandon, we do have
Thank you.
another
Thank you.
question in the room here. I'm gonna turn the mic over to John.
Hey, thanks. How do you identify, good reputable multifamily brokers in just places where you can join these forums like you're talking about, or investors forums?
I think the question was, how do you identify reputable multifamily brokers?
Correct.
Is that the Yeah, well, again, here's what I tell people that come to my seminars and my trainings is, number one, you got to pick the markets that you're interested in. And number two, you start looking for deals. Once you go from being an outsider to an insider, like if you're looking, say, like in Dallas or Houston or Tampa, and I invest in a lot of those markets, you'll find very quickly, you can start doing Google searches and stuff like that, but you'll find very quickly that there's about 80% of the deals are done by like 20% of the people. So you'll want to find, who, like in Houston, there's one brokerage company that does 56%. There's one brokerage firm that did 56% of all the multifamily deals in the last 2 years. And it's Newmark Knight Frank, and then they have a team of people. But that's just one example. So it's not as hard as you think it is. There's everybody else, and then there's like the top 2 or 3 teams. So like in DFW, there's about 6 teams that do 80% of the business.
Okay, any other questions in the room here? Okay.
Thank you, John. Thank you, John. All right. Well, thanks everybody. It was great
Hold
being
on
here.
just a moment. Got one more.
Oh, good.
So I helped manage for a little over a year, like over 20 apartment complexes, and most of my interest in multifamily comes at the fact that they are in one spot. So I'm working on my 7 single family residential, but obviously you can multiply faster with multifamily. So I was just curious, when you talk about general partners and things like that, it sounds like you really, gotta kind of like prove yourself a little bit, but like I'm one of those people who would like to find the creative deals or maybe find a partner that wouldn't mind investing with me. So how do you do that? Like, you just kind of go in there and be like, have all the confidence in the world, or,
Well, that's a good question. And that's what I help a lot of people do, because there's a lot of time and energy that goes into being a general partner, and to do it yourself could be daunting. So a lot of people that come to my workshops, they meet each other and then they like split up the workload. So like the first step, and I didn't catch your name, but the first step is, again, you when I say invest in yourself, it's just more than education. Like, you got to be, have you ever heard the saying, like, you got to put yourself in the right room, right? So like, what I mean by being in the right room is put yourself in a room full of a couple hundred other people that have made the same commitment as you, or they're already made the commitment. Like they've already made the commitment to be a multifamily investor. They've made a commitment to invest in themselves. A lot of my new students, they partner up with someone that has more experience, and they bring value to the table. Like, maybe you find a deal that they don't have access to in a market that they're not looking at, and you find a deal, and then you leverage their experience and track record. They help you raise the equity, secure the debt, get the deal done. Happens all the time. So it's a team sport. And the way you get confidence is by being around other people that are already doing it. That's what happened to me. I went to this seminar, and like I said, I was one of the most skeptical people there. And by the end of the 2 days, I'm meeting some of these people that are doing deals, and I'm thinking, these people aren't any smarter than me. All they did was take action. All they did, they're not smarter than me. They're just ahead of me. Meaning, like, they started a year ago, so they got a year on me. But they're not any smarter than you. Some people just started already.
Yeah, so I'm Casey and my husband is Dave, and we'll see you in April in Dallas.
I love it.
Thank you.
I'll be looking forward to seeing you. All right. Thank you, John.
Thank you so much.
All right. I can't hear you now. There's a little bit of an echo, but it's been great being here. And I just want to thank you, John, for having me, and thank everybody on Zoom and there in the room in person. And I hope I've inspired everybody, and I hope to see some of you in Dallas.
Thank you, Brad. Appreciate
Thank
it.
you, Brad. Let's give him a round of applause there.
All right.
Thank you,
Yeah.
Brad.
All right.
Appreciate you
Joe.
coming on. All right. And as promised, we got more to do here tonight. Let me find my agenda. First, go ahead and do our Hampton ones. We usually kick off that way. Jeannie, can you get the lights on over the stage? It's that switch that's turned off right behind you there. Okay, again, my name is Lloyd Allender. I'm on the board of directors here with the St. Louis Real Estate Investors Association, along with all the other people you see helping out, like Jeannie and Laura over there, John in the back of the room. Kristen over there that helped do the raffle tickets. Oh yeah, by the way, if you came in late, and you want to go to the circus, did you get a raffle ticket? If you didn't, hold up your hand and we'll try getting one to you, because we're doing a drawing here next. Okay, as it wants. Anything at this point, anybody have things something real estate related that you're looking for to buy a property, or you're a wholesaler maybe that has something new under contract and you're looking for an assignment on it? This is a good place. We got investors there, and I will also say we'll do our disclaimer like we do on our Friday events. Anytime anybody you met here, we don't do a thorough background check on everybody in the room. So You have to do your due diligence. If you find somebody that's got a deal, make sure you do your due diligence, just like any, something you find anywhere else. And don't take somebody's word for just the fact that, oh yeah, they've been a member of the group for 20 years and they're a great person. But I have been a member of the group for 30 years and I'm a great person. But don't take my word for it, it's somebody else.
Hi, good evening. So this fell to my lap this afternoon. I have someone who is looking for a, 4-bedroom, 3-bath, probably the Richmond Heights, area. Looking for a pool or a yard big enough for a pool. She doesn't want to go over 650K for that house. So, I was just trying to see if anybody had anything. She's been on the MLS, she hasn't found anything, so anything off market would be good, preferably like freshly renovated. So that is what I have from her, and then, yeah. Yes, so, my name is Jewel, my phone number is 314-325-4055. And the email address is Robe Investing, ROBE investing@gmail.com. Okay, and I think so this is gonna be my first deal, y'all. So hopefully tomorrow I'll know someone if the person accepts the offer, but I also have something that I would like to find an investor for. Yes, a wholesale deal. See, I don't even have to jargon properly. Yes, so I'm gonna start advertising tomorrow. Once they say yes, they accept the offer. Obviously, if they don't, and move on to the next one. But I just wanted to put that out there that I have something coming, 3-bedroom, 2-bath, needs some renovations.
Where is it?
Florissant. That's a good place to start. Where is it? It's in Florissant. 3 bedrooms, 2-bath. So, I'm looking at about like 157. The aftermarket value would be 265. If anybody is interested in that one, now. Same information, yes. Okay. Thank you for coaching me through this. So my name is Jewel, again, Jewel. My phone number is 325-4055. And email address is robeinvesting@gmail.com. Call me, email me, whatever, like, please, flood me with information. Yes. Yes. Awesome.
Hey, congratulations. Yeah, hopefully, we connected with somebody here tonight that'll snatch it from you. So take it up on it. Okay, who else got something?
Doing a 1031 exchange on a property in Florissant. It's been sold and closed April 12th. And if you're familiar with the 1031 exchange, we've got 45 days to identify a property, 6 months to close on it. Our daughter has a store in Webster Groves, super area. And so I'm looking for a house in Webster Groves, Maplewood or Richmond Heights. We're gonna rent to her and then she'll buy that house from us. For what we've got, and we're not looking to make a profit. But if you've got a house you might be interested in selling in that area, or you've got something you're rehabbing, or you've got a rehab coming up, I'd be interested in talking to you at the meeting. I got one in Vanderbilt. Where? Vanderbilt.
Okay, why don't you give your contact information?
Yes, it's
Yeah.
3-bedroom, 2-bath, so we're actually, she can do 2 bedrooms. 2-bedroom, 1-bath. I'm sorry, what are you looking for the amount? I'm sorry. How much? How much? Maybe 3, 4 would be a stretch. The house we're doing, I'm doing 1031 on the stores, and it's definitely not a high-end house. It's been rehabbed and it's really in nice shape, but it's stores. My phone number is 314-608-5655. 4,400. And I'll be here after the meeting if I can touch base. Thank you.
Hey, thank you. Who else has got something? Ron?
Hey, everybody, my name is Ron Nash. Hey, everybody, my name is Ron Nash, and I'm here with my associate, Charles. And we have money available for you, and private money lending, it's what we do. And so if you know of anybody out there, in yourselves or in your respective networks, if you know of anybody that needs to make the cash, call the Nash. And I am Charles Bruce. I'm the same boat with Ron. You need the cash, you need the juice, call Dr. Bruce. And it's 636-346-8639. And Ryan Nash, my number is 314-323-1659. Thanks.
Thanks, like that. Mark's got it going there.
I'm Mark Corix. I also do private money. I rehab hundreds of units. And one of the other features I do, I can help you save a lot of money on your rehabs from the experience that I have. Save you money on lots of different things and better ways to do it. 314-267-6944.
Good evening, everyone. I'm James Grayson with Plumbing Innovations, where we could help you with all your plumbing needs, commercial, residential, basically everything, service. So just give me a call with anything you need, or actually just come to me. I got a bunch of cards available. Thank you.
Why don't you give your phone number or contact for the Zoom audience?
Okay, it's 314-665-5268.
I'm Dan Busher. Anyway.
There you go, right there.
Okay, I've got a son looking for a house. He's only approved for, I think it's 187. So anybody has a house, that has to go retail, can't get a fixer upper. Also, I am looking for stuff. I'm out in St. Charles, so I prefer to be out in St. Charles, but people look at anything down here in St. Louis. 314-536-1045. Anybody else got anything? As it once. Anything service related, like, say, plumber or not? That's our EDA AC guy. Oh, there you go. You can do a pitch for yourself.
Hi, my name is Brian Stanley with Energy Home Team Heating and Cooling. Been in the business for 25 years. I'm a real estate investor that works for other real estate investors. You can contact me at 314-494-6176. Be happy to answer any questions you have.
Hey, thank you, Brian. Okay. That's it. Anyway, I was gonna make a few more announcements since we didn't get that in before Brad. Just a reminder, we do have our networking lunch. We moved it to the first Monday of every month. We had a great crowd, about 14 or 15 folks. They're this month. And the first of April is going to sneak up on us because it is the first. It's April Fool's Day. No, not cool. We're really going to have lunch on April 1st at 11 o'clock, the Applebee's on Olive and 270. And then every Friday, we have our Zoom. That's John sends out, or Diana sends out invitations on Thursday afternoon, and then again on Friday morning. If you're on our email list, you'll know that. And we do have some lunch every week there. And on the first Friday every month, we have Kathy Davis, the attorney. She can answer questions. I call it the Ask the Attorney Day. She's very, very, she's the best eviction and property attorney in the St. Louis area, probably in the state. And she willingly gives her time to give us advice and on those days. Anyway, and I hope there's some people on Zoom tonight and get some great questions too. Hope that we can see you all here next month in live and in person. John's got some great programs. We got a contractor, I've got to write his name down here. He's a contractor's contractor. He's gonna give us advice on how to screen our contractors and verify, that they're, gonna do a good job for us and check out their references. We all need contractors to keep our properties maintained and renovated. Okay, mentioned earlier, we got our tickets now. I think we can go ahead and put it on. Jeannie, I see Jeannie's got the bowl. And let's get your blue tickets out. Okay. Okay, the first one. How about I just do the last, probably just the last 3 digits, like they are all in sequence. The last 3 digits are 724. Who's got a blue ticket with 724?
They left.
They left. Oh, I'm sorry. Sound. Need some more for the rest of us. Okay, this is the last 3 digits, 714. Close, 714. Oh, there we go. Okay. I hope you decided how many tickets you want. I said earlier that you needed. That's 5. Oh, that one. Okay. You got the whole series here. Okay, 714. It's earlier here. Are you all going to service together? Okay, well, how many tickets do you need then? Pardon? Yeah, you gotta take a kid as a game that's over yourself. This is for kids too. Come on. Oh, well, yeah, well, here, with the.
I just want to say that we do have some more pizza left over, so if you want to take it home, you're welcome to it. Okay.
Okay, the next one is 731. 731.
I'm not on the board. Great.
Seven, 3-2. 732.
It's a better look at you.
That's 732. Nobody's got it? Next one. We're gonna go to the tickets are out. 725. 725. Yeah. Okay, the next one is 728. Seven, 2, 8. Going once. Seven two zero. 720.
Can I claim it from online?
Seven 718. Okay, let's see, who else has got a ticket in the house? Seven 22. Okay, 721. 721. Seven one seven. Seven one six. Seven 30. Okay.
Yeah, those are adults. Hold on.